Good morning and welcome to today's Trading European Open Live here at the Live Trade Room. And today now is Wednesday the 3rd of October. So just to give you a brief intro, we're technical traders. We trade with live capital every day. And what we look to do is to identify high probability trading opportunities. So we've got a means in which we can do that, looking to stack those odds in our favor when we trade these financial markets. We then look to execute and manage trades, so that's looking for opportunities in terms of identifying exactly where to enter and of course how to manage those trades with a view of how to exiting these markets with a high degree of consistency and discipline. And then with one ultimate aim, and that is to generate consistent returns on a regular basis. So without further ado, let's begin with our risk warning. Please do, of course, familiarize yourselves with the risk warning currently up on screen. Okay, so let's before we begin, let's conduct a quick review of potential market moving news. The reason why we want to do this is to be fully aware of any news event that could impact our trading. Now, it's important to note that it is a bank holiday in Germany. Germany is the biggest financial player, obviously, in the Eurozone by a reasonable margin, and they're obviously away from their trading desks. So volumes are going to be a little bit lighter this morning, so do bear that in mind. Outside of that, it's a bank holiday in China as well. But we look for high impact news events, and we're looking here at the British pound. We do have a services PMI figure. It's expected to be 54.0, what we're looking for is significant deviation off that number. As you can see, they're all roughly very, very close to the forecast. So we'd really expect the same again, so not likely to provide any major concern or problem for the British pound. We also have ADP non-farm employment change. If I just swing to the downside, we have the FOMC on Friday. And this is the preliminary kind of employment data really release that gives indications for that bigger event. Obviously, employment is a big consideration for the success of any economy, and the US economy is very much at full employment at this stage. So we'd expect a decent number. They're expecting 185,000 jobs, should I say? And if we look at the map, you can see that there's, I suppose, arguably a slightly upward tinge for the last 6 or 7 years. We've peaked in 2017. Oh, I suppose a lot earlier than that, really. But there's a slight sort of upward sort of bias to it, really. So that fits in really with the bigger picture. As we look through beyond the ADP number at 1:15 UK time, we have the 3 p.m. non-manufacturing number, and we also have the US dollar crude oil inventories number as well. So do be aware of those, and we have some central bankers speaking later on this evening. So always have the potential to be volatile periods for the markets. So that's really a focus for the day. We'll come back to the services PMI number at 9:30 and just see how the markets interact with that figure. So these are the expected news events. What we also have to contend with is developments in Europe with regards to Italy. There is certain aspects in Europe as well with regards to Poland and Hungary. So there's structural geopolitical concerns for the Eurozone. And in addition to that, we also have Brexit negotiations going on, and that is evolving all the time with the Conservative conference. So we have these rolling events, and they are impacting these markets. So we kind of need to trade these markets with all this information in mind. And of course, the big one is the trade talks between the US and China, the two biggest economies in the world, sort of going head to head. And it'll be fascinating to see, firstly, how these negotiations pan out and what that means for the rest of the world, really, because I'm sure it'll have a variety of different impacts. So we've got sort of issues with sanctions on Iran and Europe and I think Russia and a few other. China are kind of going against the US with their sanctions, and so there's lots of geopolitical risks as well. Earnings season in the US and also midterm elections are all going to be added to the pot. So we would ordinarily expect a lot of volatility, a lot of significant moves, but of course we shall wait and see. So that is the news events. So let's get straight into the charts. And we'll start with the euro dollar. So we've had a bit of a reversal, and we've spoken a lot about the 15.24, and you can see how important that level is. You know, it's prevented this market from pushing higher on a large number of occasions. So we've got these levels in here, really preventing this market from moving lower. Yes, we get breakouts to the downside, and we also get breakouts to the upside, but then this market continues to respect this level. And to the upside, we have the 118 level, which you can see in here. So we're clearly in a sideways moving market, apart from a little break to the downside, which didn't really last very long. So this is effectively what we look to do, is to identify market conditions, and that for us, as we look at this chart, is a consolidated market since the beginning of May, effectively. So that is what we're in. If you want to classify it, yes, a little breakout, but as you can see, 2 or 3 days to the downside and then a strong reversal back inside. And it was during August as well, which is summer trading conditions. So those are the market conditions. What is our directional bias? It's very much to the downside. These markets have come from higher. So we are very, very interested in looking for opportunities to sell. And the opportunities to buy would really exist for us above the 118. And it'll be interesting to see how this price action plays out. You can see that there's a little bit of a head and shoulders here, potentially coming into this market, which would be a little bit on the bullish side, actually, if we got a break above the 11800 in the end. So levels we need to be aware of and just understand. So we've had a nice flush to the downside. This is where the momentum has been recently, and we're getting a little pullback off these lows. So we didn't really see the continuation that we would have expected yesterday, having finally broken below the 15.24. So trying to remain disciplined and engaged with these markets. We're getting a bit of a pullback today, so we'll see how price action starts to play out. Kind of similar situation really with the pound dollar. Yes, we do expect this market lower. However, we are currently experiencing a bit of a pullback in this market. So we're happy. We're looking to stay in this on a daily time frame. So we're quite happy to be in this market and see if we get further rollover to the downside. Today now we're getting that pullback price action. So not an awful lot to work with. The dollar yen is an interesting candidate. Yesterday we saw a bit of yen strength coming in. We wondered whether there would be a little bit of more weakness creeping into the dollar yen, and that would mean a little bit of yen strength. But no, the dollar has sort of come in and started driving prices to the upside once more. Dollar Swiss. You can see we're on this really strong pullback in the dollar Swiss market, and we're bouncing off these levels in here. We're currently above the weekly high. So again, it's just price action that we just need to see a little bit more from. We don't really want to be getting in at these highs at this stage. We're kind of running into levels of support at these prices, and it doesn't give us that potential positive risk reward in that market. So one to watch. We will continue to watch it, but difficult to trade up at these prices. So we just need to see a little bit more in this case. The dollar CAD, the Canadian dollar, has been strengthening, of course, at these lower prices. We've had a strong breakout to the downside, but as you can see, we're still firmly contained within inside the highs and lows of the last 3 days. And that's what we're seeing. We're seeing a funneling of price action here at these lower prices. And again, we just need to see a little bit more from these markets. A good candidate for the day, which we'll look at closely, is continuation in the Aussie dollar to the downside. So I do want to come back to this market. Same situation for the New Zealand dollar. We're slightly below yesterday's low. So we can see if an opportunity exists in the New Zealand dollar. We come back to that one. So we're getting a little bit of a breakout to the upside, followed by a really strong reversal actually in today's candlestick. So again, quite choppy price action, not that reliable as of yet. We were looking closely again at the fact that the pound has been quite choppy. This is kind of mixed price action really that we're looking at. But what we did see was yesterday a break below that low. So we were looking quite carefully at the 147.17 level to see if we got at least a further break to the downside. But as this market has opened, it's just literally pushed back up. So not surprised to really see a little bit of choppy price action at these levels here. That's very much what we're seeing as things currently stand. A lack of clarity again, unfortunately. And we did have a good few days there where there was clear, distinct price action, where price was moving with a certain degree of clarity, which is what obviously traders need, certainly with our approach. So the Euro Yen just bouncing off these lows in here, and again a little bit of indecision now. It could be argued that this is the pullback to the next move to the upside. It's just there's a slight structural failure now, and we'd broken yesterday below the weekly low of the 131.16. And we're reversing quite nicely above that level as we stand. So if some strength starts to come into the euro, we're likely to see the Euro Yen squeeze higher. We just have to contend with this kind of price action as things currently stand. So we shall wait and see. A market that we would expect to see a bit of continuation off yesterday's strong move would be the gold market, and as you can see so far, we've not really seen that move. It will be worth just monitoring today just to see what happens to price action in this market. The oil market, we're finally back with the oil market, and as you can see, we've had a really strong explosive move in that time. We had been looking at the 72.52 to the upside to see if we got a really constructive break above that level, and as you can see on Friday, we did get that bit of price action, and we've now just really, prices have really pushed to the upside in the US oil. So the uptrend remains intact, and I'm sure we're at levels now where OPEC have achieved their targets in terms of price, and I'm sure now there's going to be issues with regards to the price of oil being too expensive. We've already heard that from Trump in terms of the impact that can have on inflation. So hopefully these prices don't get out of hand. We do have crude oil inventories today, and if it's a positive number, we're likely to see this market just roll over to the downside. However, we must stress there's not always correlation between the US inventories, US oil inventories, and crude oil, should I say, and the actual newsprint itself. So that's US oil. UK oil, very similar situation. Really strong, explosive move to the upside. Really clearly defined breakout above the 80.05. So really strong move there over the last few days. So that's the oil markets. The S&P 500. We do like the idea of this pushing higher. Certainly with yesterday's price action in mind. Like yesterday Monday we had a rejection to the upside. Yesterday we had a break beneath the low, and we were actually looking for the potential for this market to actually squeeze lower and create what's effectively called a double top or an M formation, which would be quite bearish. But we had a strong rejection of that level yesterday. Bearing in mind the trade talks as well, we're now seeing this market push back to the upside. So again, we just kind of need the correct signals to look to get into it. And then we have disparity between, I suppose, the three equities. So some indices are performing better than others. Obviously, the Dow Jones is now at an all-time high. So we're firmly in this bull trend with very little opportunity, I guess, to get into this market. When you do get a pullback and you're so close to an all-time high, what you'd be concerned about is a rollover to the downside. So these markets continue to defy gravity almost, and continue higher no matter what. And there's a lot of tailwinds for these markets. There's a lot of potential concern. There's a lot of I suppose we are going into earnings season, and there is a huge positive expectation on the earnings front, and the economy is performing particularly well. And of course, these markets are reacting to that, and that's why we're seeing these markets push higher. Very much fundamentally driven, and we'll certainly monitor them, and if we get opportunities to get into them, we'll look to take them. The FTSE market, again, a little bit of odd price action now this week. Monday, Tuesday, Wednesday, threatening to push lower. Strong rejection to the downside off the weekly low. I might add the 74.45, and a little bounce higher. And the same situation really for the Euro stocks. Yesterday we would have expected continuation, and we started getting an uncomfortable pullback, and we've continued that pullback again today, with actually a little gap to the upside. So the close of yesterday's market was the 33.84, and we opened at the 33.95. So that's the difficulty with the Euro stocks. And we can keep an eye on one of the oil markets as well. We keep an eye on our favorite oil market, which is the US oil. Really strong uptrend. So what we'll do is we'll just put these 4 trades. This is effectively our trade plan. So we'll have a look at these in a little bit more detail very shortly. So we want to see the gold market. So we'll have the US oil market on the top right. We'll have the gold market on the bottom right. And we've got a couple of currencies as well. First one, New Zealand dollar. Maybe we put this in here, bottom left. And we put the Aussie dollar top left. So these are the best opportunities out there really at the moment. We're just seeing this price just roll over to the downside. And we will continue to look at the remaining charts and see if there's any further developments in any of them. Okay. So this is our trade plan. We're looking to sell the Aussie dollar and the New Zealand dollar, and potentially looking for an opportunity to buy the US oil and buy the gold market. I suppose it is fair to say that there's a couple of caveats to these trades. Not so much with the Australian dollar. Let's step back and we'll have a look at this price action. So yesterday we were able to get involved in this trade to the downside. We had a really strong pullback to our 7200, which is kind of the level that we would expect this market to pull back to in the latter part of yesterday evening, and then we've had the little rollover to the downside. A little bit of choppy price action really during the Asian session. But we are continuing to just roll over to the downside. So we really want to see how this market interacts with yesterday's low, which is the 71.61. So we're only 7 pips away from that level, so it's worth keeping a strong eye on. And if we get in at this level, we don't really have, I suppose, the place for a stop loss placement is probably the 71.85, somewhere around here. That's probably a little bit too high for us. We kind of need to get, if we can get a move lower followed by a pullback like we've seen here, but in a more time conducive sense, like if we can get price pushing back to previous support in a quicker time fashion, then we might give us the opportunity to get into it to the downside. So for us, this is relatively straightforward. We're firmly in a bit of a pullback consolidation kind of phase with this market. So we'll look at the 71.61 level, and we'll see if we can capitalize on a move to the downside below that level. So that's our trigger to get into this. And then we just we'll have some decisions to make with regards to our execution and then our management of that trade. So we've just identified a potential high probability opportunity, nothing more than that just yet. So just taking that same information across, definitely a little bit choppier, isn't it? And we are now technically below yesterday's low. So that became a level of support, as you can see, and now we're breaking through that support to the downside. So this market is a little bit better to work with. We have this high sitting in here. So it's the 65.82, and we're currently at the 65.72. It would make it for a very, very small. Right, let's go ahead, and we do have this low just down here, you see. Right, what we'll do is we'll have a slightly bigger stop loss in this trade, but we'll look to sell it below the 65.67 and just err on the side of caution. We're not getting a very clear-cut picture with the US dollar today. It's a bit messy. So we'll err on the side of caution and look to get in below the 65.67. So the corresponding level here is the 65.67. So this is what we're seeing in the US oil market. Really explosive move to the upside, followed by a lot of sideways moving consolidation in this market. So we're looking from a range between these lows down here and the 75.93 to the upside and the 75.05 to the downside. And we're getting a nice constructive pullback if this market does roll over to the downside. We'd prefer it to push higher above the 75.93, maybe a break above it, pull back, and maybe get into that market. So we're just currently in between these two levels. So it would be interesting to see how price interacts with these highs and lows. So I suppose for the purpose of the analysis, we're effectively looking for continued strength to the upside in the US oil market. And now finally we just have the gold market. And again, if we look at this on a daily time frame, we're currently consolidating, so that's the market conditions, and we would like to have a really strong move to the downside, and there's still every expectation that this market will continue to roll over. Now the level to the upside is the 1214. That's why we were interested in looking at it, so this one is more for observation. In fact, we can, because of that, we can continue to look at it on a daily time frame. So we don't think there's a tradable opportunity there for a little while, but it'll be interesting to just monitor this chart and just see, do we get a break above the 1208? And if so, we could be approaching the 1214, and that is the big level for the gold market. That would be a structural failure to the downside, and we'd be likely to see a lot of buyers coming into this market above the 1214 level. Yesterday, there's a bit of a reaction to the situation in Italy and the uncertainty that would bring, plus trade talks as well. So there's a couple of issues which make the market a little bit nervous, and as a result, we saw some capital entering the gold market. So these are our trades. We do have the Aussie dollar threatening to squeeze lower. We're only a few pips below this level, and we can either get in on the breakout or we can get in on a pullback. So if we get this move lower and prices pull back to the 71.61, there's your high probability entry, and we'll just keep an eye on the two commodity markets there and see how price starts to unfold. What would be very useful for us is if we got a bit of follow through across some other dollar markets, and it's hard to say. I mean, a bit of resistance maybe around the weekly low, so that might hold up prices there in the pound dollar. A bit of dollar strength seems to be creeping in. And the markets are just going to act and behave the way that they are, in the build-up to the FOMC on Friday. That's the next major news event, so we might just get some positioning prior to that. So let's see if we get that continued strength. Every chance in doing so. Okay, so those are our markets. Unfortunately, we don't have a huge amount to other markets to really kind of work with. Not just yet anyway. Things could obviously change pretty quickly. Okay, let's see how we get on. Okay, so I just posted a comment there into the chat box, and do feel free to utilize this chat forum. If there's anything that I've said that perhaps you don't understand, or if you're not sure why we have an understanding of these markets the way they do, and why we're looking to sell the Aussie dollar, for example, or why we're interested in the gold market, for example. So any questions you have, feel free to post them into the chat box. Okay, so wondering if we're just going to get a little break below the 71.61 level. We're not too far away from that level as things stand. As we look across the other markets, we really don't have a huge amount to work with today, as of yet anyway, in terms of our style and our approach to these markets. Now the FTSE 100 will start to will react very closely to the pound and the movement of the pound. So if the pound strengthens, we're likely to see the we're likely to see the UK, the FTSE 100 just roll over to the downside and hopefully create a bit of a structural failure in doing so. Now, in addition to that, if the pound weakens, what becomes important to us is this weekly high here of 75.56, and seeing that strong move. And this is now a structural failure. So we've had a bounce off these lows. We've attempted to make a new low and failed. So that's now a higher low, and we're getting this move to the upside. So this is the level here that's really important for us in the FTSE market, and it just needs to show us a little bit more in terms of what it's looking to do, because at the moment it's just quite choppy, and the price action here in the Euro stocks is not great either. So some mixed pictures in some of these markets for sure. Okay, we're right at this level now effectively. Now what we want to take on board is previous candlesticks, and we've had a bounce off this level already on 2 occasions. So the likelihood of us getting a third bounce is probably significant. And that's why it's important to wait and make sure we get that break below that level, because that will be something that this market hasn't achieved recently. So now we're breaking down to this level. We do have, there's a nice structural failure in there. The 71.86. Right, that's the only place for a stop loss at the moment, and that would mean it would be 25, 27 pip stop loss. So we're not ultimately comfortable exposing that amount of capital really on this trade, unless we took half the smallest size we possibly can. We could probably do that. So what we're suggesting is to maybe capitalize if we do get a break below. Let's say this market does continue lower, it's the next pullback that we'll get, that we might look to sell it from a slightly higher price. So we've had a nice run up to this level now, and it's important to see how price reacts. So if we get in on the breakout, we've just got our stop loss. It's kind of too big, so we'd much prefer like a smaller stop loss if we possibly can. So I think for that reason we're going to wait for it to break through. Break through to the downside, and then on the pullback we might look to get into it at that point. So it's only because we respect support and resistance, and this is a kind of a genuine level for us. So we want to see price break through it with consistency, and even if it doesn't, then we'd probably be justified in our decision making for this market. So the Aussie dollar is looking like it's bouncing off that 71.61 level. So a little bit of a slow morning, isn't it? A little bit of a slow morning here today. So there's the suggestion that there's dollar strength. We're still likely to see that strength, but it's just a case of when. You can see, like, if we take note, this is why we buy and sell above and below the daily levels, because a lot of the time markets can really struggle to break above or below. So if you wait and see how price, interacts with these lows, you can often save yourself from getting into them, because there's often a strong rejection of that level, and it happens on quite a number of occasions. So today's high is exactly the same as yesterday's high. So the high is the 1208.24, 1208.21. So exactly the same height, or the same price. Okay, so look, we'll revert back to our trading screen. So the oil market is firmly in between these two levels. The gold market is just coming off a little bit. The Aussie dollar is just bouncing off to 71.61. And the New Zealand dollar is still threatening to squeeze lower, but with a lack of sort of follow through and momentum. And these are all on 15-minute time frames as well. Okay, so so as we look at these markets, then we can see that the Aussie dollar is just bouncing off this level here, the 71.61, and you can see the importance of that level. It's yesterday's low, and that's why we were waiting to see if we got a break of this level, because that would be potentially worth trading and hopefully capitalizing on the next leg to the downside. But we didn't. Well, we certainly haven't seen it just yet. Even though there's an element of dollar strength creeping into these markets and these prices just rolling over to the downside, some of the opportunities here are a little bit on the quiet side. We'd like to see a little bit more activity during the European session. Now, of course, we've already alluded to the fact that it's a bank holiday in Germany and they are one of the biggest players in this European session. So not ultimately that surprised to see volatility is probably a little bit lower, and volumes, tradable volumes are a little bit lower. So no major surprise on that front. There's a bit of dollar strength creeping back in to some of these markets. So we've identified the Aussie dollar to the downside as a significant high probability trade to the downside. Same situation for the New Zealand dollar. We're just in this sort of slowly grinding market, lower market, and that's what we're looking to do. Yeah, the gold market, we're looking to see if prices break above the 1208, and it doesn't look like they're interested in doing so at any point. And the oil market is firmly between these two highs. So not a huge amount to really work with. So just going back to our screen. US oil, gold, New Zealand, Aussie. So this, for the time being, is our trade plan. As you can see, it's not hugely active just yet, but we will be monitoring, seeing what's going on with these prices for the remainder of the session. So what we might do, guys, is we might switch across to the live trade room. We do have traders over at the live trade room. So if you are interested in learning how to trade these markets, we do offer a membership which you can get access to over 76 different webinars per month, and we trade with Live Capital, and you'd be very, very welcome to join us. We're currently offering a 14-day free trial without any obligation of any kind. And if you do decide to join us, if you want to know what the T's and C's are, it's just a straightforward $9.99 per calendar month. So hopefully you find that invitation as well. So feel free to go to our website, the LiveTradeRoom.com, and you can see our full array of products and services. Pretty comprehensive stuff there for you. If you are genuinely interested in learning how to trade these markets, of course, with reality, not with bravado and misleading statements and promising you will be a millionaire by Christmas. That's really not what trading is for the vast majority of profitable traders. So there is a process to it. It is a skill that you can develop. It is potentially quite lucrative, but of course, only those that learn how to manipulate these markets. And conditions are particularly tough right now. There's no getting away from that. We've seen it and we've been experiencing it now for a little while. So the market goes through these periods where there's really clean-cut opportunities, easy to identify, and we're able to make some money off them. But then the market slips back into this kind of choppy, indecisive, range-bound kind of price action. So So that's just having an understanding of the market conditions, and then you kind of lower your expectations as a result, and wait for those market conditions that are more conducive to your style of trading, because it does ebb and flow all the time. And what we want our traders to do is to be consistently profitable over the medium and longer term, and really see your P&L move to the upside, and not be super erratic where you might take 3 or 4 massive winners, and then you'll take 3 or 4 really big losses, and you're on this roller coaster ride. You probably don't really know fully what you're doing. So that's what we're here to do. We're here to help and provide mentorship for you to learn how these markets work, and learning the nuances behind these markets as well. So what we'll do is, guys, we'll just switch across. It's at the top of the hour now, so we'll switch across to the live trade room. Please feel free to connect with us through our YouTube channel. Do like and subscribe and give us a thumbs up if you can. And you can also connect with us through our Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So on that note, guys, thank you very much for joining us. We will be back again live at 1 p.m. UK time, and we'll see if these markets start to open up. And hopefully we'll be able to get into a few trades. So we'll be looking very closely at the New Zealand dollar and the Aussie dollar to the downside, we would imagine, for the remainder of the session. So we'll switch across to the live trade room now. So thank you very much for joining us. Take care, and we'll speak to you soon. Bye for now.